see by the dawn's early light was so proudly we hailed at the twilight's last gleaming, whose broad strides and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets regular upon bird singing out, yeah, through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the
Good morning, good Friday morning. World HD is live on Rumble, X, and YouTube every weekday morning, 8 a.m. Eastern Time. Today's Commodity Friday, day 24 of the government shutdown. About another week, probably. I would assume President Trump's going to make this trip to Asia, and then we're going to see that become front and center. There's a lot of jockeying for position on this. You can see both sides trying to blame each other, of course, right? No surprise there. Where's the public think the fault lies? That's the big question, because that's what's ultimately going to make them finally get together and stop the shutdown. There was talks of trying to put money out there for the military, but that seems like it's fallen through. So this thing's starting to get heated. It will have to get dealt with here soon. I'm assuming President Trump will make this round trip to Asia. Now, remember, he was going to go to there was going to be a meeting in Budapest with Putin, and that's now called off. So there's a lot of stuff getting called off. That might have been a good name for the show today. How much can we call off? So we're going to get to that stuff today. All right, we've got economic data out today. We've got the CPI data coming out at 8:30. There's the traders are deprived of their data. So we're going to see what happens with that today. We'll talk about that. And then remember, one of the things I want to throw out there at the beginning of the show is we had 2 Fridays ago, we had that crazy down move late in the day on Friday, right? Information released at 10:57, not retracted. Liquidity was low in Asia. Liquidity was drying up in Europe, and then almost done for the day. And then obviously after midday in the U.S. on a Friday, typically a lot of trading desks quiet down, people leave, or they're not very active, because the rest of the world's not there, right? So we saw that sell off, and then we saw the one last week on Friday morning, right? Early Friday morning, like this time Friday morning, it was bottoming out, and then the rest of the day it rallied back, and that was off that 65.74 in that S&P. So 2 big moves down, right back down to the harmonic, the full upside harmonic level. Now it's the 3rd Friday. We've got a lot of stuff going on. So is there going to be, we have the CPI data to kick things off. We have a PMI data out at 9:45. We'll get to that here in a second. And this University of Michigan sentiment and inflation revision numbers, those are coming out. I think because that stuff does come out still. So that will come out. So fairly data-packed morning for government shutdown situation where apparently where we haven't seen that much data lately. So that plus all the other things going on, there's a lot of stuff going on with this crude oil too. We talked about that. It got down to, I think, just cracked 56, down in the 55s earlier this week. It's kind of getting stretched. We talked about that. Maybe pulling in any reins on that stuff a little bit, looking to reset on a rally. I think that's what we're getting. We'll take a look at the crude oil chart today. But there's so much going on with Canada, Venezuela, um, Russia, India, China, all these major oil users, refiners, extractors, um, and so big deal on that front. So talk about that too. Want to take a look at that chart, see where things stand, and then soybeans. Right, that's this one that's gonna, as President Trump and President Xi prepare to meet next week. That's going to be one of the top four things on the list. And this is a lot of this is a power control, right? One, it's for the U.S. farmers for sure, but we've seen this stuff going on in Argentina with these debt swaps, trying to protect Argentina, going after Venezuela, going after Colombia, going after Brazil. Okay, Lula da Silva, going after Maduro in Venezuela, Petro in Colombia, and then obviously trying to protect and defend Malay down in Argentina. A lot of stuff going on in South America too. This goes into this agricultural trade. It goes into so many different things. But the soybeans, again, if China can continue to buy their agricultural stuff from South America, it gives them more influence over that South American region. If they're forced to buy U.S. soybeans, and they lose some of that influence. Okay, so it's taking away this. So there's a lot of things in play. It's funny how all this stuff works. Okay. All right, so let's get into some of the data today. Let me see here. Hopefully this is all working as it should. Good. That's good. Oh, let me pull this down. All right, here we go. And let me get rid of this. See if we can clear that off there. I think that'll work. Okay, good. All right. So this was the weekly economic data, and let me clear. Like I said, I need to work on this. All right, no, nothing. There we go. Okay, so we have the this week. This is what it's been leading up to. Is this U.S. CPI data today? Mostly light this week. A few things. These retail sales and out of Canada. Crude oil inventories, again, pretty flat, not a major deal there. UK, so again, CPI out of the UK. I think we had another CPI read. Japan had a CPI read. This is going to be the big one today. And I thought there was another one that I wanted to talk about on here. Anyway, from the big picture for this, it was a hodgepodge of data this week. You can tell when the U.S. doesn't have data coming out. We don't get this very often. The last shutdown, I don't remember. Might have been under Trump 1.0, like 5 or 6 years ago. 2017. I want to say maybe 2017 was the last shutdown. Anyway, the point is this, that you can tell when the U.S. economic data is down in the markets, and you can see it around the world too. It's the driver, right? And we're not surprised by that. But it is good to remember that this is kind of a hodgepodge, and there's really no theme. I guess that's a takeaway. The theme goes away when we don't have the data in the U.S., and it's not, and we get on this cycle, right? That's the thing. There's this cycle with the inflation data, the PPI, the CPI, and there's the retail sales cycle. Then there's the employment week, and then there's then you get these the manufacturing data that I like to look at, and then the housing data, right? That kind of trickles out over the course of a month. So again, we miss a lot of that stuff. So we're out of that cycle, and this will be the big one. And so this is always a little concerning. We get the CPI data when you get this much kind of pent up, looking for something. I think it really shouldn't be this way. It's not that big of a deal. Markets continue to function without this data. They're pretty good at figuring stuff out on their own. They really don't need this data, but nonetheless, that's what we do, right? We look at this data. All right, let's take a look at what we've got today. A couple of key data points, as we were saying. U.S. CPI out at 8:30, expected at 0.4%. Now, what they're going to look at is I think the real number here is going to be the annual number. If it cracks above 3, and that's going to be a sign that the way they're going to interpret this is that the tariff, all the tariff activity is finally kicking over into prices. Okay, so if you raise tariffs on people 10, 15, 20%, some places higher, China could go to 155, I think is the high number if these trade negotiations don't go well as we roll into the 1st of November. The key is at some point, some of that stuff is going to have to trickle through, okay? And the corporations can backstop that for a little while, right? They'll just absorb it. And remember, this isn't 10 to 15% on all goods. It's only on the cost of goods coming in. So if we're buying a pair of tennis shoes from China for $8 and then Nike's marking that up because they've got to, box it and make it look good and advertising, and then they got to pay all their sponsors or pay all their athletes. All that kind of stuff gets built into the cost that goes to $150. So if you see a 10% tariff on an $8 pair of shoes or a $15 pair of shoes, it's 80 cents to $1.50. So that's 1% on a $150 pair of shoes. But it looks like 10%. So we have to keep that in perspective. I think we talked about that a lot. That was in the news a lot when we first got into this tariff world again. We were looking at all these different, this tariff, that kind of tariff, which one's going to hold up better, this and that. Now we're just down to the brass tacks of this. What is the trickle through on the inflation, right? What are the corporations going to have to absorb? And is it going to trickle through? And that's why they're looking for this 3% print. Now, we've talked about this, October, the Federal Reserve, why does this matter? The Federal Reserve is going to use this data to do whatever it is they're going to do. And, over the last week to 2 weeks, we've been talking about the pressure to maybe go 50 basis points in December. So 25, a quarter of a percent is baked in for the end of October next week. It's really about the statement. Is there a change in the statement? And then what happens during the Q&A, right? When Jerome Powell gets questioned. Do they hint at 50 basis points? And this is the kind of data that will give them the room to do that. President Trump he's wanted to bring rates down significantly. Stephen Moran, who got kind of shoveled into the FOMC, fast-tracked into there, he's been saying low rates for just get them down there and hold them steady down there. Okay, so there's a lot of trickle through in the economy. We're going to see this in the automotives. We're going to talk about that a little bit today and the trickle through on this. And then we'll look at a couple clips too from Jim Chanos kind of hinting around this whole thing. And we've run some clips on Jim Chanos through the, since the show has been started, but he's a short seller. And so it's good to look at these guys. Smart guy, been around the markets for his whole life. I would say probably 40 to 50 years. And so we're going to look at that. What is the impact on these tariffs and inflation in the system, and where is it starting to hit people? Okay, that's going to be the other thing. And I think another thing to really think about here is the inflation is the markets can only focus on so much at one time, or they only choose to focus on certain things. And I don't really think they're focused that much on the inflation unless this number is just crazy, like 3.3 or 3.5 or something like that, or 2.3. Anything above like 2.4 to like, I don't know, 3.1. I would say anywhere in that 2.5 to 3.1 range for the yearly number is probably going to keep that as a back burner item, and they're really going to be focused on jobs. And why we need to look at jobs is Target's laying off, Amazon's been laying off, there's talks of automotive layoffs. Is this because of a weakening economy, or is this because the AI is starting to come in and displace jobs? That's I think that's the really big question that the Federal Reserve hasn't really addressed yet. Will they get that question at the meeting next week? Will one of the reporters in the FOMC press conference, will they have the guts to, are they allowed to ask that question, right? Because that's the big question. How much is AI displacing these jobs? And can you even combat it? That's the thing, is the Fed being almost rendered useless here, because that's not going to be their role. They can't compensate for that. It's something that's too big for them to They can't even get inflation in check right now. If they really have to go after jobs too, it's almost like they're not going to be able to handle this mandate. It's going to be too big for them. Okay, and then we get U.S. Flash manufacturing PMI out at 945. This revised University of Michigan sentiment out at 10 a.m. That's expected at 54.6. And on that flash PMI, there's a couple of numbers that come out here. I want to look at the manufacturing side of it again. We're watching this Russell index to see if it can hold up better than some of the other indexes? Can it hold up above those prior highs? So we've shown that chart, one or two or three highs. It's finally broken through. It's above those it's at all-time highs. If we're seeing the manufacturing, what does that look like coming back here? The manufacturing. And so we want to see this purchasing managers index on the manufacturing side to see if there's some kind of a sign that supports that Russell 2000 going higher. Okay. And I'll leave it at that, right? That's the big thing to take away from that flash manufacturing in my mind. Okay, so back to these University of Michigan sentiment numbers. These things move the markets, but I just think they're narrative control, right? I think this number's been hijacked once before, and I think it's been hijacked lately. With this much economic data not coming out, will this number throw things off? They could come out with some wild number on this, and will it have an impact on the market? And this is what happens when you get like 8:30, you get a big number. Then 9:45, you get a semi-big number. And then you come back with something at 10 a.m. and you get something that's really wild. Lots of knee-jerk reactions in the market. We could, spike up, spike down, spike back up, and then the trend gets set. Or maybe it just sets the trend, and then if it just piles on. Those are the things you want to watch for as this data comes out throughout the morning. Okay, at least from a trading perspective. All right, so that gets us through that stuff. Let's take a look at these headlines. So again, we talked about this government shutdown, day 24. Investors look to CPI data. Trump. Okay, so we'll get to this one. Before we get to this one, I want to go back. Trump yesterday had a bunch of questions, and she was talking about Japan, the Japanese currency, and is it manipulated? I think it's probably more subject to manipulation now than it was, because Japan was for 20 years, since the late 80s, early 90s, Japan became what's called the anchor for this carry trade. Interest rates kept going lower and lower and lower and lower in Japan, so people could go to Japan and borrow cheap, and then they could actually invest in things in Japan or other places around the world. So these hedge funds, what they were doing is using it kind of like a borrowing institution. They would go in and pick up yen, pick up Japanese debt, and lots of ways to do this. But you basically buy the currency, a low yielding currency, and then you take it somewhere else. So if it's yielding 2%, but it's going to 1.5%, and you think that's the case, then you can take that 2%. You know that you're sort of protected by this yen going down, right? Interest rates going down. And then what you do is you take that someplace else, a higher growth location in the world, like China. Okay, take that money to China, and you put it in there if you think you're getting 5% growth, 8% growth, 10% growth. And so a lot of private equity, hedge funds, and so forth were utilizing, and essentially abusing Japan for a long time with this carry trade. That sort of came to an end last summer. It blew up once. They put the trade back on. They're still doing it. But part of the reason, the way they want to end this, is to have interest rates rising. Okay, and that's what's happened with Japan a lot lately, with Ishiba and the Bank of Japan, UEDA. They're struggling with trying to get interest rates to rise. If they can get interest rates to rise and they think that it's trending in a direction, then the carry trade, it's hard to put that carry trade on. If you think interest rates are low and going lower, it's a lot easier to put that carry trade on, because you think you can get that money for a period of time and go someplace else and make a longer term investment. If the way to stop that abuse in Japan is to have interest rates going in the other direction. So we've been talking about that. The US is coming down in interest rates. Europe's even talking about coming down in interest rates. A lot of the world's coming down in interest rates. Japan was trying to go against the grain to put an end to this carry trade, right? To basically keep it from being abused anymore. And so the problem is now we have this Takaichi in there, okay? Is she going to go back to this lower interest rate policy? If so, then is the Japanese yen going to be one of many countries that can, again, get used and abused by the currency, okay? By low interest rates and a very, very weak currency, okay? So hopefully that answers that question. So I think that it gets used, and it's been used and abused for a long, long time. Can it be manipulated? The short term, sure, right? Anything can be manipulated short term. I think longer term, it really boils down to the one that, again, a currency has been, this is probably changing as we get into these different forms of currency, but a currency has been the representation of the people, the culture, the productivity, the growth prospects, the defense. Can the country defend itself? And Japan's had all those, right? It's had the it's had the backstopping of the U.S. has backstopped Japan ever since World War II, right? We moved in there using Japan as a base, right? There's a lot of military operations. And again, we blamed it. We didn't trust Japan after what they did during World War II, whatever, that whole story. But the point is that they had the defense, they had the culture, right? Produce good products. Obviously, we see that with automotives. We saw it a long time with technology, with a lot of high-tech stuff. Sony was dominant for a long time. They were pretty good on the technology front. Will they be good on the technology front again? I don't know. Productive people, very productive people, very efficient for what they're given. I mean, it's a little tiny island nation without a lot of commodities and resources, and yet they're able to bring that stuff in. They're not very good on energy either. So they're importing a lot of things. So they're very efficient because they have to bring in commodities, they have to bring in energy because they don't have a lot of that stuff on hand. And yet they still produce some of the best products out there, especially in the automotive space. So all in all, I think that's the thing with Japan that keeps it from long-term being manipulated, unless that thing's falling apart, right? And that's the question. How extended are they with their debt? That's ultimately going to be their fate. Is can they get their fiscal situation under control? And that's why this Takaichi, and that's why all the dissent between the LDP and the political turmoil that's been going on for the last month. Is she going to get in? Is she not going to get in? Ishiba stepping down, Takaichi, an election coming up out of nowhere. So the and we'll talk about that. I haven't traded the yen that much lately. I think it's going to be worth having a position in there. Especially if we think this dollar could go up, right? If I think this dollar could go on the upside, what does that mean? There's going to be a basket of currencies that go down. What are those? It's looking like the Canadian dollar. We'll get into that in a second. It's looking like potentially the Australian dollar. We talked about that a little bit. I think Europe especially, right? The euro, and the Swiss franc are front and center for me. And if that's the case, we can actually use the yen as a counter trade to that. So we can actually get long the yen sometimes. If we think that's going to be what's going to be the real push down against the dollar, okay, then the yen can be strategically used in there, okay, to kind of hedge things off sometimes. So with that being the case, we'll look at this Japanese yen a little bit too. All right, so we'll get to that more, but I just wanted to come back because you had quite a few questions on that. I just wanted to come back to that. Okay. So we went through this stuff, looking for the 3% print on the inflation. I think I got through all this stuff. Yep, I think we're good through that. Okay. All right, let's jump into this. Trump terminates trade talks with Canada over this ad. Okay, so this was a 1987 ad, radio address by President Ronald Reagan, saying that Canada, and what they're trying to do here is say that Canada, they're trying to mischaracterize this commercial. And President Trump terminated the trade talks with Canada over this. So again, things were going great. We talked about Carney on Monday, looked at the meeting in the Oval Office a week or two ago. And then they had the trade representatives in D.C. trying to get this trade thing to go through. And then this ad all of a sudden, catches fire. And now the trade talks have terminated. And this was the ad.
When someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. And sometimes for a short while it works, but only for a short time. But over the long run, such trade barriers hurt every American worker and consumer. High tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs. Throughout the world, there's a growing realization that the way to prosperity for all nations is rejecting protectionist legislation and promoting fair and free competition. America's jobs and growth are at stake.
Okay, so you can see why that would ruffle some feathers, all right? And that's what it's done. So trade talks terminated, and we'll see where this picks back up again. I think they're going to have to sit with this for a week, and the trade negotiators are probably headed home for the week again because all the action's going to be in Asia this next week. All right. Okay, so let's roll on to this one. Let's hit this Trump on Venezuela. So we've seen the attacks on these boats. Okay, it's been put to us front and center, and now they're making for sure clearance for activity on the ground in Venezuela. And here's President Trump talking about Venezuela.
The next step in this war on cartels, and are you considering options? Are you considering strikes on land?
Well, I don't want to tell you exactly, but we are certainly looking at land now because we've got the sea very well under control. We've had a couple of days where there isn't a boat to be found. And that I view that as a good thing, not a bad thing. But we had tremendous amounts coming in by boats, by very expensive boats. You know, they have a lot of money, very fast, very expensive boats that were pretty big. And the way you look at it is every boat that we knock out, we save 25,000 American lives. So every time you see a boat and you feel badly, you say, wow, that's rough. It is rough, but if you lose 3 people and save 25,000 people, these are people that are killing our population. Every boat.
Okay, so there's the background on it. Here he is with another short clip, pretty much laying it out only as President Trump can.
Well, I don't think we're going to necessarily ask for a declaration of war. I think we're just going to kill people that are bringing drugs into our country. Okay? We're going to kill them. You know, they're going to be like dead. Okay?
Okay, so you can't get more clear and more efficient with words than that. And so we've talked about this thing heating up in Venezuela, right? South America I think this is all part of putting pressure back on President Xi and part of this Asian, the meeting that's set with President Xi for next week. Again, South America is more important than I think the media will let on or that most people are aware of. And it's a lot about these minerals and the resources. It's a lot about agriculture. It's a lot about, South America's big and, it gets forgotten a lot. It's not a nuclear power. I think there's no nuclear weapons in South America. And then you have, of course, the Panama Canal, the shipping ports, the shipping through the Caribbean. You've got the drug trade. There's a lot of stuff going on down there, and it sort of gets forgotten. And, we've sort of just written it off. At one point, Argentina was a very wealthy country, post World War II. And then it got, abused and trashed. And then same thing with Venezuela. We've seen anybody who's followed that, you've seen just, the gold being ripped off out of there, the Maduro, it's been scandalous. The voting, the elections, there's so much stuff that's going on. Then, of course, we get Brazil, and Brazil's probably the most stable out of all of them in a lot of ways. But then we have the atrocities that occurred in the 1970s down in Chile. So it's been abused, and you wonder, when did China start to exert influence, or when did whatever China is, right? These globalists, these neocons, the power players, when did they start to exert will across South America? I don't know the history well enough, but we probably should know. This is, again, there's so much stuff to research. But nonetheless, this is a very important region from so many different reasons. And this enters into the equation with President Trump and President Xi. Now, we saw some things fall apart this week with India. India was supposed to meet with President Trump on this Asian tour. And again, he backed out of it, said it was because of, the Festival of Lights, Diwali. But I think it was because he's just afraid to deal with it, right? He's afraid to pick a side, right? He's like, okay, if I pick Xi, then this. If I pick the U.S., then that. He's going to try to continue to straddle the fence. The problem is, I don't think that Xi or Trump are going to allow that to happen. At some point, Modi's going to have to pick a side. And so are a lot of these countries. I think you're going to have to pick a side. And that might be what's going on with South America, right? Right now, the side's being chosen, okay? It's like, and remember, there's a lot of policy in place that we should be protecting South America. It does fall in our domain. But then China can say, well, Taiwan falls in our domain, and we don't want that to go because of the chips, okay? And letting China have full reign of the, the TSMC and the NVIDIA chips and all that kind of stuff, right? All the feeder things that go into these NVIDIA chips. So there's definitely a geopolitical geography. Oh, there we just got our data. Wow, that was, let's see, what did we get here? Man, that was painful. Okay, a lot of things got hit. Okay, so we get, so it's not a 3% print. Let me just flip over to this. Okay, here we go. Yeah, I just need to see what the damage done there was. Okay. So pretty much all my currencies got hammered. Okay, so here we go. We've got the September CPI month over month, 0.3 versus 0.4. So it's actually lower month over month. Year over year, it's lower too, right? It was estimated at 3.1, came in at 3. Highest annual pace since January. So what else do they have to say here? Okay, let's take a look at this. CPI X food and energy month over month. So stuff will fill in here, but so far not that much. I don't see a whole lot. I just don't see the reaction on this. Again, the markets are starved for data. And so there you go, right? We get this massive reaction. Now that might settle down. We'll take a look at these stocks. The stock market ripped. The Dow ripped pretty good off of that. The Dow went back up through the upside halfway. I'm assuming the S&P and the NASDAQ did as well. Let's take a look and see what these treasuries. Maybe we'll just take a look at that real fast. Let's just jump in here. We'll take a look at what's going on. So here's the Dow, and we got this pop off that data. Okay, so we have. So we saw this last week, got up to the 5/8, came back down to this, let's see here, all the way back down to the 1/8 yesterday, I think it was, or that was the day before, 24th. So that would have been, so Friday, this would have been Thursday. So this was Wednesday. We saw this, the Dow come all the way back into the 1/8. Then it's climbing back, kind of hung around here, and then it just gapped back up through the halfway, this dark green line. All right, let's take a quick look at this S&P, what's going on there. So I'm assuming, yeah, you can see the big spike up here, back up through its halfway as well. So that's pretty significant, right? Dow and S&P. Remember, we have the harmonic structures on both of those. And when you see a gap through the halfway like this, we've talked about that. Pretty bullish, okay? If it can hold above this dark green line, in this particular case, we've got this new one, this weekly signal. It's at 68.12. And in the Dow, what is that one at? Let's get that level too. We've got this 47.111. Right, so what are the full upsides? Do I have those marked? I don't think I have it marked on this one. Okay, so if it can hold above those dark green lines, we're back in this bullish stance again. Okay, we're above the old harmonics at 65.74, and the S&P clearly above that white dash line on that one. Okay, again, that was our ultimate backstop that got tested last week a couple times. Let me see if I can pull that up just as a reference. I didn't want that. All right. Let me take a look at this. I think this is where it's at. Yeah, there we go. So again, this is the ultimate backstop right now, the 65.74, that white dash line. That's the one that got tested last Friday, the Friday before. And now we can see this thing racing higher. We use this new harmonic, right? That's that backstop. Keep that one in mind, right? That's that old residual. We're kind of far away from that again. This harmonic, kind of dialing in. This is a weekly signal. That one was a monthly. This is the new one. It's above this 68.12. All right, that's going to be our new line in the sand. What are we doing? We're bringing in the risk. Okay, so we're trying to bring this in, focus in on the risk quite a bit, and not leave it at 68. 65.74, whatever that number is, right? And we're above the pink shaded zone. Okay, and you can see the S&P did come back down into here and retested it. So that's what we were talking about. It kind of took off out of the gate, went straight up. It's like this thing's probably going to come back and retest this breakout zone. You can see all the yellow circles I put on there, the reactions, the harmonic structure came back into the breakout zone. Again, this is an ideal spot. If someone's really, really bullish this market, okay, this is down in that pink zone. It's a pretty good spot because why? You know your risk, all right? Now, for me, I've been on both sides of this, long sometimes, short sometimes. Yesterday, it was both directions, in the Dow. Long Dow, short the Dow, multiple different times. And right now, I didn't have a position going into this in the stocks. Last night, I think yesterday, where was I yesterday? I think I was long into the close, and then I think when we had a couple earnings come out. I think I took a short position overnight, didn't work, cut it before I went to bed, and then obviously this morning we get this gap up. So at this point, if this level holds is 68.12, I'm going to be trying to be a buyer on dips, okay, today, and see if we can't get some continuation on this, and if it trades around this halfway, that's fine. We could, again, you can trade both sides of it. If it breaks down below it and starts to sustain some time below that 68.12, all right, then maybe you think about a short again. But the odds are high that this thing's going to stay above that 68.12, and it's going to, as long as this level holds, we're probably going to see this thing make a push higher and maybe up to the full side objective. All right, that's what the market's telling us at this point. From at least at this quick assessment of it. And you can see again, the Dow spiked up above. It's coming back, hanging out above the dark green line at that 47,118. And I think the target on this thing, let me see if I've got that. The target on this is, I don't have these marked, but the target on the S&P is, let's see here, on the weekly, the target on that is 6,909, 6,909. And I forget what we were at on, let me see what the S&P is trading. Let's just take a look at that. I know we're bouncing back and forth quite a bit. So 68, what's it? Sitting at what? 68.17. So another 100 points up in this S&P. So what is that? Like 1.5%, probably a 1.5% move on the upside still, if it gets to that 69.09. And again, that would be another checkpoint, another major checkpoint. And then on the Dow, we've got, let's see here. The full upside objective on that's at basically 47,800. So 47,797. And we talked about this, that if we get above that, I was saying kind of like 48.2. We get above that 48,200 and we start getting these 50 basis point rate cuts. Again, to me, the CPI data doesn't really warrant it, but that's what I was talking about at the beginning of the show. I don't think they really care, right? They've got something else in mind, right? They're looking at jobs, they're looking at other things. And if that's the case, then and we crest this so again, it was 48.2 was kind of just a psychological level I had in my head that if we crest that 48.2, there's a good chance they're going to run this thing up to 50,000 because it's within reach. All right, big psychological target, the confetti on Wall Street, the whole thing, 50,000, that whole deal. Now, I would kind of revise that down now and say above this 47,797. All right, 47,797. So basically 47,800. If it crests that 47,800, okay, and it can hold above that, then that's a even better level than the 48.2, right? Because it's a harmonic structure, not just a stab in the dark by me. Okay, so 47,800 on this December futures contract. We get above that. There's a good chance that this thing could have a massive run, into the end of the year, into the first of next year. The combination of the two, because if the 50 basis point rate cut would start getting built into December, and then probably January or February, all right? And then they would be done. That moves that terminal rate we've talked about that was at like 3%, right? These rate cuts, slow trickle of rate cuts, 25, because we're at what, 4.25 now, so you get a 25, a 25, a 25. So they were kind of thinking like down at 3. And then we talked about this, maybe revising it down to that 2.5. So again, the terminal rate now at 2.5 instead of the 3. And how do you get there? You add 25 basis points on 2 rate cuts, you get 50-50 instead of 25-25, and that gets it to that 2.5. So again, still the same number of rate cuts, just more aggressive. All right, that's kind of, and that would fit with this whole concept of these markets holding above this. All right, and you can see this Dow spiked above. Looks like it's going to come in, or the S&P spiked above. Looks like it's going to come in and retest the 68.12. All right, while we're at it, let's just take a look at this. So that's the Dow, that's the S&P. Hopefully those make sense. We'll keep coming back to those. These are very active right now. And you can see the NASDAQ, I think it might have hit new highs here. I can't really tell. Let's see while that's filling in. It looks like it went to new highs. Yep, new highs. Okay, looks good. I mean, looks great. Let's see what's going on with this Russell. Okay, so let me just dial in on the shorter term so we can get a little bit better look at this. Yeah, so you can see there was its spike. And let me go to this. Okay, so that gives us a little bit better look at the spike. Okay. And let's look at this. Okay, so this gives us even better look. All right, this is basically a 1 hour chart. And let me throw this up here. Let's look at these prior highs, and you can see this thing sitting right on that right now. So the there we go. Okay, so again, this is what we'd be looking at now. Does it break those prior highs? This one right back in here was the 1st of October, October 3rd, and this one right here is October 21st. Right? We've had a couple big sell-offs in there, but now it's back on these highs. If it punches through there, that's confirmation on the Russell too. So now we're seeing we don't have a harmonic structure. At least, again, I need to go digging for that. A couple things I need to do: fill out these the harmonics on this crude oil market. Although it doesn't probably matter at this point because crude oil is coming back to that 60 to the 68.13, 60 or no 63. Well, gosh, I got a lot of numbers in my head. Let me just take a look at that so I don't misspeak. 63.18, that 63.18 level. So you can see it's coming back toward that. But let me go back to this. I don't want to get off track. But the Dow and the S&P have the harmonic structures. We don't. I want to double check and see if there's anything on this Russell over the weekend. It would be nice if we had something on that too, because it would give us another market to watch in different markets. Okay, the Dow, the large cap, Russell, the small cap, and then the S&P in the middle. NASDAQ, no harmonic structure. But it is on all-time highs. So this would give us confirmation. A break above here on the Russell gives us confirmation in pretty much every index, the small caps, the large caps, and everything, the tech, the S&P, everything in between. All right. And again, are we looking at 50,000 on the Dow? If we start racing to the upside and we start more and more talk comes around these 50 basis points, that's going to be the thing I'm going to look toward rather than, what's the full upside on this S&P? I think it's like, 68, 6909. Like that doesn't mean much. 7,000 means something, right? So 7,000 target on the S&P, that's psychological level, right? But again, I think 50,000 Dow is more of a target for the narrative. If that's the one that I think they could gun for because that's the 50,000 on the Dow is a big deal, right? Probably one of it's big. It's bigger than the Dow hit 10,000. That was a big deal. Then you get 20, okay, 30, yeah, okay, 40, yeah. I mean, those are all big deals, but like 10,000 was a big deal and 50,000 is a big deal. Just like 100,000 would be a big deal. So between 50 and 100. Not as big as psychological levels. And for some reason, markets love to gun for this stuff, right? We saw that in Bitcoin gunning for 100,000, 125,000, right? These big psychological levels. That's what I would start to key in on is if we start seeing this 50 basis point rate cut, then that's what I would look at is this Dow 50,000. That would be the big psychological target that it would gun for. Just like gold 5,000, or gold 4,000, right? These big psychological targets. Why markets do this? I don't know. They just do it. Okay, so that's that was the stock stuff. We'll come back and look at a few of these other markets toward the end. All right, and see where the damage is at. Yeah, that wasn't fun. That wasn't fun. I had some great currency positions built, and it just instantaneously you could pop, all of them hit. So bummer. Lots of work for nothing there. Okay, let's see. Pick back up where we were at here, and I want to come in and say hello to everyone in the chat here as well. All right, so we got through the Venezuela stuff. Cover this President Xi thing and President Trump and President Xi here in a second. All right, so let me come in here and say good morning. We've got, let's see here, Crash and Splash. Good morning, Rachel. Good morning, Zero Woke. Good morning. Saw you last night. I've seen you around this week a lot in a lot of things. I think you've been catching a lot of the stuff that was out there with Aaron and Courtney and everyone else. Okay. Did you go on a trip? Okay, I think I have the right one. Yeah, okay. Let's see, Rachel. Okay, so Rachel's moving around, busy. Talked to her yesterday. She sounds busy. Anyone seeing unrest over people not getting their free money? TZ Burton, good morning. Rachel, again, Gordon, good morning. I highly recommend watching the Technology Roundtable if you haven't seen it yet. Yeah, so I thought it was pretty good. I mean, thanks for saying that, Gordon. I appreciate that. I'd like to see it have a little bit more of a, like a direction. One, from a preparation standpoint, so you don't have to prepare quite so much. And that we have like a beginning and an end and then let it go in between, kind of have a destination. So I'm going to work on that, see if I can't direct a little bit of that. Because that's one thing I think that there's so many topics to cover. And not only that, we can come back and recover topics again. But I'd love to see us, have a, a little more direction with it would be great, but again, I mean, just, Patrick Wood's brilliant and Courtney's brilliant and Aaron's amazingly brilliant. So, okay, so we got Rachel. Okay, so she's got a lot of stuff in here on social unrest. Okay, TZ, second large Democratic Party. All right, so we got some good conversation going in there on that. Okay, TZ Burton, you can't have fair and free trade if only one side abides by it. Yep, and that's what we're dealing with, right? That's the goal, I think, of President Trump, right? Is to equalize trade. I mean, that's what we have to hope. Okay, in November, Sidney Powell said that Venezuela and others were involved in election fraud. Yep. Okay, good. All right, so Craig, you're going to be okay. Craig, are you going to be okay? On my trades? Yeah, I'll be fine. Thanks, Rachel. I appreciate the concern. I'll battle back. We battle back. It's not the first time, and it won't be the last time it happens. So, but thank you for that. I appreciate the concern. Okay, so good morning to everyone, and thanks for joining us. All right. Okay, so let's keep rolling here. We've got this Trump and Xi meeting set for next week. All right, so I think it's tonight. I want to say tonight or tomorrow. President Trump's going to leave for Asia. I don't know what's on the list for this weekend, but I'm sure he's not just going there to sightsee. I'm sure there's some stuff slated for this weekend. I just don't know what it is. Most of the big meetings pick up next week. And the big talking points, again, no surprise, but rare earth minerals, technology and chip sales to China, soybeans, okay? We'll take a look at that chart here in a minute. And this quiet pressure around Taiwan and the maritime exercises all over this Asian rim by China. It's going to be very interesting to see what the conversations are. And then I think Japan comes later in the deal, right? I think the meeting with Takaichi is later in the week. And that's what's going to be interesting to me is see, like, what is the conversation? What's the vibe that we get from, one, their relationship? Do they strike up a pretty good relationship? Does it look good? Does it feel good? And does that show strength again against China? Okay. And the united front again between the United States and Japan and South Korea. Okay, South Korea has been very weak politically for quite some time, and so can the U.S. kind of get a grip on South Korea and Japan from that perspective, and then obviously from Taiwan, and keep China in check? Okay, from a defense perspective, I don't know I'm assuming Hegseth will travel with them, and Brooke Rollins will be traveling with them, right, from the U.S. Agricultural group. And again, I don't know. I'm trying to think who else would go. I would assume Burgum will go. I'm sure Susie Wiles is going to be there. I'm sure Marco Rubio. I mean, I would imagine most of the entourage will be there. But the big things center around these things, right? The rare earth minerals, the technology, the soybeans, and this quiet discussion of defense. How much will that really show up in the talks? Probably not a lot, but it probably won't show up a lot. Let me see here if I can get back. Okay, there we go. But it'll be a kind of a hidden discussion, I think. It will be the little innuendos. And then again, with President Trump, maybe he just comes out and says it. You never know with him. I mean, just like he said with Venezuela. You just take him out, right? I mean, and he's got good justification for it, with the drug trade. He's got the numbers, right? Again, assuming those numbers are correct, that every one of those boats they take out saves 25,000 U.S. lives. It seems a little high to me, but maybe he's right. Again, he can sometimes tend to overestimate things, but that being said, maybe it's fairly accurate, okay? And all right, so those are the big things. Now, recall also that Trump will not be meeting with Modi. We talked about that, straddling the fence, clearly. And then the meetings with Putin in Budapest and Hungary with Orban have been called off, right? That was looking pretty encouraging. It's been called off. We also see Zelensky now coming out saying he's not willing to accept any of these territory swaps. So that means that he's not going to give up this ground that Russia's taken, okay? So digging in deeper, and how's this goofball getting funded? Okay, that's the question. Who's funding him? How's he getting funded out of Europe? How's he getting funded by the U.S.? How's he getting funded by the West? And if the funding were to stop, this war ends. This guy has nothing. But clearly they want it to go on, and the question is why. And so lots of tensions around the world. And how long does this go on? Does any of this get diffused this next week in Asia, okay, with China? Do the tensions? I think there's a lot of tension out there in many different ways. Obviously, on the trade front, but I think also on a global defense perspective. And you know, there's so many things, and again, we could go 20 different directions with that. The drones, chips, the um, you know, um, we've seen recently, the ships, the shipping industry, charges into ports, and who's controlling the shipbuilding in the world? Mostly China. They've kind of stolen that, and I don't know if stolen is the right word. They've partly stolen, partly deserved. I guess it's a combination of hard work plus theft by dumping goods, like China does, right? That's what they do. They dump a lot of goods. So there's a lot of different directions we can go with that. Let's just see what happens with this Asian trip. I'm very curious to see like how this thing gets handled. What are the tensions? How much pressure is applied? How friendly is it? What's the vibe that we get out of this whole thing? Again, China, South Korea, Japan. Okay. Let's see here. So we got through that. Okay, then I wanted to talk about this. Let's kind of change gears just a little bit on this whole front. So let me see if let's do this one first. Okay, so we've got, all right, let me get that over there. Okay, so we have Musk saying that he's planning this robot army. Okay, and this week he had a conference call after the earnings were out, and it was not well taken by Wall Street. I mean, Musk can get kind of crazy. He gets way off on a tangent sometimes. So he says here, the CEO wants more control through 25% voting stake, and he's defending a $1 trillion compensation plan. I think it's not quite a trillion. It's like 975 or 985 billion. But nonetheless, a huge compensation plan. So here it says he's planning to build what he has described as a robot army. Wired reported earlier this week. Okay, so that's one of these Silicon Valley magazines. Citing remarks by Tesla CEO during the company's recent earnings call, the billionaire entrepreneur said to be seeking greater personal influence over Tesla as it expands into robotics and AI. According to the report, Musk is pushing to increase his voting power in Tesla to around that 25% level, arguing stronger control is necessary as the company develops humanoid robots and AI systems. Now, one of the things I was talking about during this Technocracy Roundtable is one of the things we can't forget here is that the human hand, okay, has like 21 to 27 degrees of freedom. Okay, you've got 3 knuckles on a finger, okay, 3 knuckles, right? And then you have 2 joints between your shoulder and your hand, your elbow and your wrist. And when we add all these things up, it still places the human being more valuable from a manufacturing and fine motor skills perspective. And again, we always have been told that the opposable thumb was a big thing for the human being. The fact that we can grip things, okay, and how it expands our brain. Now, with that being said, these humanoid robots are at like 17 degrees of freedom. Okay, so we see them, them parade these things out. We see them doing backflips and jumping up on things and so forth. All that stuff's fine and dandy, right? And they see them getting knocked down and they're able to regain their balance. So all that's great. But when it really boils down to it, I think it boils down to the degrees of freedom of the hand. And obviously its ability, to battery power, how long can it last, how much storage can you put in it, and then how do you program it? And how quickly can it be reprogrammed to take on different tasks? But again, the hand is being left out of this whole thing. It's at 17 degrees of freedom. So as soon as they close this gap and they get it to 21 to 25 degrees of freedom, like the human hand, now it's a direct competition, okay, with human being versus robot. So we're seeing this coming along, and I think this is one of those real benchmarks that we have to watch out for. This is when it gets concerning, and why maybe, the AI we can understand, it has a place and it can make decisions, and sometimes better than some human beings, probably. Okay. It doesn't need time off. It doesn't need downtime. It does require a lot of energy. Okay. There's upsides and downsides to both of these things. And of course, we as humans are interested about the humans, okay, and not as much about the robots. So we're trying, again, this is from that technocracy perspective and technology. Okay. So let's not confuse technocracy with technology. In the technology side of this, if we're going to implement this and go down this road and we're going to pay this guy $1 trillion, okay, to create all these, massive amounts of humanoid robots, we have to understand what's going on here. Okay, so let me just take a look at this. Let's finish up this article. So we've got here, he says, he wouldn't feel comfortable building a robot army unless he has a strong say in how it operates. The proposed payout, unveiled in September, would be distributed over 10 years if Tesla meets its series of ambitious milestones. To unlock the full package, the company must raise its market value from just over $1 trillion to $8.5 trillion, deliver 20 million electric vehicles, produce 1 million robo-taxis, and build 1 million Optimus humanoid robots. So that gives us a lot of what their objective is here, right? How you go from 1 trillion in value to 8.5 trillion is 20 million electric vehicles, 1 million robo-taxis, and 1 million Optimus humanoid robots. Achieving these targets could increase Musk's ownership stake from 13% back to 25%. So again, he's had high percentage stakes in this, and then at times it's been given up. Okay. Tesla's humanoid robot Optimus has already appeared at company events performing these simple tasks. Musk said a new version of Optimus V3 is expected in the first quarter of 2026, featuring improved hands and arms. See, that's the key, hands and arms, okay? I think that's the key. Components he described as the most difficult to design. All right, so now we say he's described Optimus as an incredible surgeon and suggested that widespread use could create a world where work is optional and everyone has access to high quality medical care. All right, so here's the thing. That sounds great, right? That's how they're going to sell it to us. Don't worry, you don't have to work. Here's universal basic income, right? We're just going to have all these million of these humanoid robots running around doing all the work for you. And surely we're going to give you any of the money that's made off of this. We're going to make sure we give it back to the people, right? I mean, like, come on, like we know better than that, right? I've never seen it work that way, okay? Where someone out of the goodness of her heart, Elon Musk is going to go to $1 trillion pay package. And I'm sure in the goodness of his heart, he's going to redistribute that around, with saying, okay, yeah, we could go on for hours on this, and that's what we do in this technocracy roundtable, right? Is go through this kind of stuff and talk about this. What are they doing, and how are they funding it? And then what are they really doing with the healthcare? So we've looked at sovereign wealth funds, how are they funding it? Private equity funds, how are they funding it? We've looked at the robots, the robotics behind this, okay? What does it mean? What does it mean for mankind, right? When we start introducing these robots into the world and we're in competition with them, okay? What does it mean when they cross that degrees of freedom, like he was saying, from 17 where they're at now to 21 to 27, whatever the number is. And there's different ways of measuring that. So, but it's not there yet. And then, what are the health, when we hear this MAHA and this MABA and these different things coming out, make America healthy again, make America bioaccelerant. What does all this stuff mean? And is it the technocracy? Okay, not technology, but technocracy. If we get technology left to people can be a very good thing, right? It's the same reason we don't, it's the same. The world is just nonstop improvements, right? That's what we're meant to do, is improve the way we do things more efficiently, use less resources, produce better results, hopefully better for human beings. The problem is we're getting this big distribution between the haves and the have-nots. Okay, so money, a lot of people who have it, a few people who have it, a lot of people who don't, right? We could show you charts all day on that. The technology front, people who have AI know how to use it, people who don't. And we're seeing that getting bigger and bigger and bigger, right? We got people watching 2-minute videos, on whatever, TikTok or what are the other ones? All these other things, right? The clickbait, even on X, right? Distracting people's minds and not focusing on this AI, okay? And how they can use it to benefit their lives and stay in touch with where things are moving. Like it or not, it's moving forward, right? So we can be Luddites and say, I'm just going to go to a cabin and run away. Or you can say, I got to turn and face this thing for myself, for my family, but for humanity, we have to turn and face this thing and make sure that we get the technology and it doesn't turn into the hands of a very few who can take off and run wild with this stuff. All right. So again, it's about this haves and have-nots and creating this massive differentiation between all this stuff. And that's what we try to cover in these roundtables. All right, so I think that covers the stuff on that. I've been wanting to show this chart. This is a pretty good one. I've got one that I've built myself, but let's just do this one for today. So this kind of gives us this idea of how this thing's been being built. Okay, so you can see NVIDIA at the center of this with their chips. And then you can see some of these big players around the outside. You can see Microsoft, which barely shows up in this picture, but it's huge, right? 3.9 trillion of connection to this AI space. OpenAI, 500 billion, right? AMD, we've seen them resurfacing. XAI, that's Elon Musk, okay? And then you can see these other ones in here that are connected to XAI, okay? And so in the center of all this is these NVIDIA chips. And then we know that China has these DeepSeek, right? Their own chips. And what we don't know is how effective they are at creating their own chips. So this is that battle. And all these different, we've got, the pink line, this purplish line is hardware and software. Okay, then we have the kind of the turquoise line is the investment. Then you've got services, you've got venture capital, circles sized by market value. Okay, so again, NVIDIA is the big dog right in the center. Okay, you can see that big circle and how these other CoreWeave and Intel's in the news again, right? Just had earnings out last night. I think they earned like $3 a share, up 8%, up like 100% off the lows. So as soon as the U.S. came in and backstopped NVIDIA, and we saw NVIDIA backstop Intel, okay, the U.S. came in and took a stake in Intel, 9.9%. And then I think they coerced or worked with NVIDIA to come in with another $5 billion, okay, to go in and support Intel. What does Intel do? It feeds chips to NVIDIA, right? The NVIDIA packages up in a product that they call, these GPUs. Just like TSMC, right? Taiwan Semi out of Taiwan. Okay, so then we get this CoreWeave, we get Oracle, again, big database player, right? Larry Ellison, we've seen him resurfacing in huge ways over the last 3 to 4 months, 5-6 months actually. Stargate, all these things going on, and then the XAI again. That's Elon Musk. And that thing's small, right? XAI is small at this point, but we talked the other day about this connection that they have with NVIDIA, where NVIDIA is going to lease them chips, and then the revenues will go back to XAI, or the revenues will go back to NVIDIA. NVIDIA leases chips to XAI, the money goes back to NVIDIA. So again, there's a lot of circular references here. And I think where we're going to in this Technocracy Roundtable is that there's a go for broke mentality here, okay? And the biggest ones are going to win this. And if they do, it's a monopoly or some kind of an oligarchy, okay? And who out of this group is going to sort of like aggregate together, okay? Who's XAI going to end up with? Because I don't think it's going to stay this nice, friendly environment, okay? There's going to be breaking and severing, and different groups go with different groups. And that's kind of what we want to hope for, right? Is that it's not one big monopoly, and that there is competition, okay? And that there is competition to appeal to the people again. Because again, we the people really still do retain the power. But this is slipping away quickly on us, okay? This stuff is moving so fast that I don't think people are aware of what's going on. And therefore, we don't get to be a part of the decision process. The decision's getting made without us being a part of it, okay? So that's one of my big fears. All right, so I think that gives you a layout here. I'm going to try to add to this over time. As we see this stuff unfold, we're going to continue to map this so that we can keep track of it, because if we don't, it just becomes one event, and then we forget. But when you put in a picture like this, you can actually see it with some kind of perspective. So this is a decent one. I want to try to do a little bit better with it and track this stuff a little bit better. Okay. I think that's good on that. I think we're good. All right. Let me, okay. And I know Rachel, I was talking with her yesterday, and she said, she's frustrated about how all this stuff's being taken up to the cloud. I think some of her information and data got taken up to the cloud, stuff that she thought was precious and she wanted to keep protected, and somehow it got slipped out to the cloud. And I think that's an agenda, is to move this stuff, it's very hard to store stuff on your own hard drives now. They're wanting very desperately to get your information out on the cloud, because once it gets on the cloud, then you've signed some click wrap agreement that says, okay, it's your data, but we have the right to access it, or we can access your location, we can access this, right? They're very crafty in how they've structured this stuff. And so what do they want to do with this stuff? they probably, two things. They want to access it to feed their large language models, okay? Because that's what they're doing. They're taking our information, our data, our thoughts, they're putting them in this large language model, right? Which you can call AI or whatever. That's my belief. Could be wrong on that, but that's what I think is happening. The other thing I think is that they want to create revenues on the cloud. So the more stuff they can put on there, the more they can come back and say, well, for $4 more a month, you can now store all your junk on the cloud and we generate more revenues. So again, it just puts more money in this whole process for them, right? Where they can just run the money through this system. Okay. All right, so let's see if that was okay. Somehow that got left on here. I don't know how that one got. That was one we covered yesterday. That's a story that I'm working on too with this poly market and this tokenization. That's a story for another day. Okay, so with that in mind, what I want to go through is this, okay? The AI and the job reduction. Okay, back to the CPI data. Probably not that important. Okay, the market's obviously spiked off of it. They, note I could go on for an hour on that one. Once again, the dollar gets pounded on data. I mean, so again, I say when you flip a coin 1,000 times, it should be 500 heads, 500 tails. It should average out. This thing is constantly, every single time we get a point in time with a big data point like this, it always trashes the dollar. So again, the dollar gets hammered and all the other currencies spike. It's like 980 to 20. Okay, it's so skewed, it's not even funny. And this is just another one. Here we get. I've been fighting this for 25 years, so it's nothing new. All right. So the point is this: we went through that. The AI job reduction. I think this is the big deal. Okay, and that's why I wanted to go through that stuff. The robotics, Elon Musk, the AI, how this puzzle starts to fit together, how the money's flowing, and where we are in this process, so that we can, awareness is key, right? Awareness is for sure the first step. And then what do we do with it? Okay. Now, this week I talked about that. We saw 6,000 job cuts at Amazon. I think we're seeing Target to eliminate 1,800 jobs. Some of it's 8% of it at their headquarters. So again, these are high level jobs. And once this robotics starts to roll out, how fast can that roll out? This goes back to the rare earth minerals and stuff like that too, because without access to that, this whole thing gets slowed down. And that might be good, right? That might be good for us because we get a chance to let it trickle out. People can actually figure out what's going on, see what's going on, and be a part of the decision, okay? Because we still matter, right? For sure, we still matter in this whole equation. If we don't catch on to this, at some point we may not matter, okay? Our decisions may not matter. Our input may not matter. All right, so we covered that. I wanted some of the money flows. I could go into all this stuff, and we'll continue to go through that as we lay out a more in-depth view of that circular reference there of all the players involved. But here's what I want to get to is this interview with Jim Chanos. Okay, here's a short clip on this, and I think this will tie together where he's talking about he thinks this AI is probably going to win, and where do we make our bets from an investment perspective? One, it's an awareness from a technocracy perspective, but two, we're kind of looking at it from this other angle, from an investment perspective. Where do you make your bets on this? Okay. And he thinks it's that whoever's making the magic with the AI is the place to put the bet. And that's where the money seems to be going ultimately. But the data centers are part of this process. And he thinks that's just going to become a commodity. So here he is talking about that.
AI is the displacement of this cycle, right? If the internet was the displacement idea of the 90s, certainly it's AI right now. I'd rather be long the companies that are producing the magic from the chips than the landlords of where the chips reside, right? So if this is going to truly be revolutionary, and it probably will be, I think you're going to have to see stuff coming out of the hyperscalers and OpenAI and really interesting applications that can be monetized. I think a lot of investors, however, are basically investing in the picks and shovels, the data centers, the equipment guys. And I think that's at the end of the day going to be a commodity business.
Okay, so this guy is he's a very acclaimed short seller. He does really good work. He'll take long bets on things, and he usually proves to be right. Not always, but he's got a pretty good sense of things and pretty good, I think, balanced thought process. Okay, that's why I like to show him, and I like to pay attention whenever he's speaking. He's not out that often, but when he is, it's interesting to listen to him. Okay, here he is talking about So, is there a bubble around the economy, around this AI space, around this stuff? We see Intel, we see Oracle creating these, leading the way. Okay, and this is what I want to add to this, to that thing. You know, that shows some flows of activity between these different companies. What I want to show is the things like the financial side of this, like the debt. Okay, Oracle's put out some debt and it was well subscribed. I think it was 18 billion. They threw out a tranche of debt, okay, a round of debt, and it was well accepted by the market. I think like 80 billion worth of subscription came to that 18 billion dollars of debt. So it was more, 4 times as much as was offered. There were people willing to take on that debt. Okay, offer up the debt for Oracle because they have such a strong balance sheet and such a great revenue stream, cash flow. They're going to probably be doing more of that, okay? And we want to watch the money flow here. Who is leading the money flow and how over their skis are they getting? Okay, so far it's pretty tight. And we can look at this through things called credit spreads, okay? So you've got safer debt and you've got riskier debt, okay? And when these things sort of come together, okay, you're not, there's no differentiation between them, right? Things that are riskier should cost more. Things that are safer should cost less. When we see these credit spreads move, okay, between these two things, like get too tight or get too wide, then it's signs of fracturing about to happen in the markets. He's not seeing that yet. And this is what he talks about in this clip.
The stock market has barely blinked with all these blow-ups. The credit market kind of dismissed them as idiosyncratic until Jamie Dimon warned about the prospect of more cockroaches. And then that kind of got people's attention just a little bit here. At what point does this become something that the credit market starts to panic over?
Well, we haven't seen it yet, as you say. Credit spreads are still almost record lows. So people are still partying. You know, if the punch bowl is being taken away, only a couple people may have noticed it yet. But so far, it's still partying like it's 1999 in the credit markets for the most part.
What I found really fascinating was that Jamie Dimon didn't really target private credit in his comments. He kind of just made the comments generally. Yet the industry got kind of defensive when he spoke up. Are these firms justified in doing so? I mean, you point out that they have promised these equity-like returns. That raises questions about the economics of their business.
Yeah, there's two things that bother me. The way private credit is being sold to investors, and I sit on investment committees, so I see this. And really, it's one of these too good to be true type promises. We're going to give you senior debt exposure, often secured somehow, but with equity rates of return, double-digit type returns, which makes you wonder about the underlying credits themselves. That's number one. And then related to that is how much leverage is being used within the vehicles to juice the equity-like rate of return. And then the other thing that's concerning to me is the explosion now in captive regulated subsidiaries by the largest players in this area, owning insurance companies, and where there really isn't a true arm's length difference between the people buying the credit and the people selling the credit to them. And that is worrisome. That's something we saw in the Drexel days, by the way. One of the things that got us so concerned in 1988 and 89 in the Drexel junk bond kingdom was the fact that more and more of Mike Milken's clients had regulated subsidiaries like savings and loans, insurance companies, thrifts, trust companies, where they were buying the same credit that, in effect, others in the kingdom were selling without a lot of arm's length disclosure. And so that is something to keep our eye on, I think, is the use of captive regulated subs to buy this stuff.
Okay, so the first part of that was just talking about credit spreads and that the party's still going on. And there's no signs of it really starting to show warning signs or cracking. So this thing can go on. This goes back to potentially the stock market, the 50,000 in the Dow, right? This kind of stuff, right? The party can go on. But then he goes on and talks about, back in 1988, back when we show that clip of Reagan, you know what I mean, talking about the tariffs, the same kind of a time frame. We saw this Drexel Lambert Burnham, okay, and we saw these things blow up. So this guy, what I guess the point in that is, you're talking that's 35 years ago. So this guy's been around. That's why I like to listen to him, okay, because he's been around longer than I have, and he sees things that I don't see, sees things that probably we don't see, and he gives you a little background on that, okay. So um, continue to pay attention to him, right? He will come out when things are cooking. So again, another 6 months, we'll see Jim Chanos out. We want to pay attention, all right? I'll be paying attention. Kind of watch the progression of this and see what he has to say. All right. A couple more things here, and then we'll look at a few more charts. We had we talked about this. Intel's earnings were up 318 per share, up 8%. Stocks doubled since it looked really grim back when Frankie and I were doing the show. And Frankie, he was pretty negative on Intel, saying it was pretty much dead. And I mean, I didn't disagree with that, but we talked about that quite a bit. Intel wasn't looking good, and that was what, March, April, that kind of time frame, maybe even June, maybe even like May or June. Anyway, U.S. comes in, backstops it, NVIDIA, and then SoftBank's in there. Everybody's sort of backstopping this Intel, and now it's up 100%. Okay, so again, a winner has been, the government has picked a winner here, is essentially what's happened. Do we need to, from a defense perspective? Sure. Is it good because we're getting away from the need to be with TSMC, Taiwan Semi? And if you really, I've been trying to do a good job in here of laying out, like TSMC and, the tariffs, and President Trump and the administration has been trying to create reasons for carrot and stick right here. Come to the U.S., set up manufacturing here. And if you don't, you're going to get tariffed a lot. Okay. So it's, please come. And if you don't, here's the stick. And Intel is sort of a recipient of that. And Taiwan Semi has, I think, manufacturing in Arizona. And so the U.S. is trying to build out, right, this technology infrastructure that had been robbed from us. Same with the manufacturing, same with the technology. It had been robbed and redistributed around the world. And that's what we're trying to do, is pull all this stuff back in. I don't think that's, to all of you, I don't think that's like a mind-blowing concept. I think that's pretty clear what he's doing, but it's just good to reflect on that and look at Intel from that perspective, with the perspective of Taiwan Semi, as this whole trip with Asia goes in, okay? Because I think these things are going to come up, all right, and things we're going to want to talk about next week. So just trying to set the stage for some of that stuff, okay? Another situation is on Ford. Ford enters into the whole Canadian thing, right? The large trucks, the tariffs on the large trucks coming in. And Ford's outlook, okay? So Ford earnings beat, but they lowered their 2025 guidance. All right, now what the market's looking at is 2026 and 2027, okay, for Ford and for these other automotives. From an electric vehicle perspective, there's a lot of competition for Tesla, okay? So we don't think that if Elon Musk is going to go from this 1 billion or 1 trillion to 8 trillion, whatever the number is, that massive increase in value of Tesla, it's probably not going to come from these EVs because GM's on board. A lot of people are saying GM's EVs are like being competitive now with Teslas. And then we know we've got all this competition coming out of China with BYD and a whole handful of other EV producers out of China. How's Europe doing with these EVs? I don't know. Probably not that great. They're probably lagging the US and even China. Okay, so Ford, so far beat 2025. They've lowered forecast. 2026 and 2027 is what the market's already starting to look out toward. Now, two powerful tailwinds for the automotives is lowering of interest rates, which we're talking about, right? 25, 50, 50, 25, terminal rate at 3, terminal rate at 2.5. That's why this stuff matters, right? Trickles through the housing market, trickles through the automotive loan sector, trickles throughout the economy. So one is the lowering of interest rates. That's a tailwind for them. And then oil, right? That's a big benefit for automobile producers too, because that keeps competition. Low oil prices also keeps the automotive, the combustion engine, in competition with the EVs. Okay, remember the EVs lost their subsidies under the big beautiful bill. So you used to get a $7,500 tax credit. That's gone away. So again, the pendulum is swinging between these two things: the combustion engine and the electric vehicles, and the rare earth minerals, right, and the crude oil, right, is swinging back and forth between the stuff. And so the the health of the consumer is going to be a big factor here. Okay. This is why I wanted to talk about with Chanos too, looking at these credit spreads and how strong and how healthy is the U.S. economy. How healthy is the global economy? Okay. And then we get into these things like Chanos also goes on. I'll skip the clip, but he talks about subprime auto lending. Okay. And so lenders are becoming more cautious with the low end consumer. All right. So they're seeing a lot more distress at the low end of the lower income consumers. And as if the thing is, as if there always hasn't been stress for the low end consumer, right? They find ways to make it work. The problem is, as we see these robotics and these humanoid things coming online and the AI, they're hanging on the fringe. They've always found ways to hang on, right, and make it, even though they get a lot of pressures. But the problem is, how far out can you extend this stuff? Okay, loans on cars, it was a big deal to go to 72 months, right? That's 6 years, right? It was like 3 years. Remember, a lot of car loans were 3 years, 5 years, right? That was kind of a range. And then it went to 6 years, okay? And that was lower interest rates that allowed for that. And now they're starting to talk about 84-month loans, okay? So we're talking what? That's 7 years, okay? So now they're pushing cars out. So what happens after 7 years with a car? Usually, especially with a fair amount of, again, with China coming on the market and dumping these EVs on the marketplace, China's going to find ways to sell that stuff in Europe or somewhere, right? The U.S. probably isn't going to, we're going to make it very difficult for China to dump their EVs into our market. But what does this do? It creates more pressure on this, downward pressure, which is good for the consumer, right? Lower price cars, whether it's EV or whether it's combustion engine. But if we don't bring oil prices down, then all of a sudden these EVs get an entry point, right? And they can displace the combustion engine more than what we might like. So what we really like is a balance point, a choice, okay, between these two things. And what we don't want to see is the low-end consumer get thrown off a cliff, because that brings our economy down, okay? So hopefully some of these things, that's a lot of stuff to absorb. But, we're talking about interest rates, what the Fed's going to do. Is the Fed losing its power because the CPI doesn't really matter? Jobs are what matters. How do jobs matter? Well, because AI, because of the humanoid robots, the pressure coming from that, the driverless cars. Okay. And we see the jobs being lost at Target, Amazon. Is that just a weakening economy, or is it something bigger in play? Is that the AI? Is this the elephant in the room that the Fed won't talk about, that everyone won't talk about, that we're coming up against things that they can't remedy anymore. Okay. The Fed can't control inflation. We've proven that over the last few years. And the Fed may not be able to control this whole job situation. Those are their two mandates: price stability, low inflation, and maximum employment. Okay. If they can't control either one of those, this goes back to David Rocket's point, where he was saying, gold 5790 displaces the Treasury, the Federal Reserve, the Fed's balance sheet, puts the power back in the hands of the Treasury. That's a great thing. Okay, we get rid of the Federal Reserve, but what happens? That puts a lot of power back into, quote unquote, the government, a lot of power, right? Because as bad as the Federal Reserve may be, it might not it might not be all bad, okay? Because it sort of slows things down. I don't know, right? These are the things. I can speculate on that for hours, right? And that's what we do. Last night I was up with Aaron and we were talking about stuff until midnight. I think he started at 6 and we went 6 hours. I think I didn't go 6 hours. He went 2 by himself, and then I was with them, I think 3 or 4 hours, talking about things like this. It's not easy, right? We're trying to sort through this stuff and figure out, is this technocracy gaining power, or is the human being still, and if we don't shine a light, then we really don't have a chance. And that's really what we're trying to do with these technocracy roundtables and so forth. So hopefully I'm stirring a lot of stuff up. I can't settle all the dust today, but what we'll do is just keep working on this. And hopefully it gives you ideas on investments, right? I think what we're trying to do is pick the big picture on stocks. Let's take a look at that here, because it came back and tested. Let's just go back and circle back to these stocks after this stuff. And fortunately, the dollar looks like it's rallying again, and the currencies have kind of settled down. This is typical stuff, right? You get a big event, trash the dollar, and then it kind of climbs its way back, right? Happens. It's happened. I've watched this stuff go on for literally decades. Okay, so here's the S&P again, right? Spiked up above. Let me see if I can blow this up a little bit so you can see a little of the detail. Okay. All right. So this was off the data, this big spike up on the S&P, spiked up to here, 68.40, and then it came right back down to the halfway. Okay, this is what we want to see. It's responding to the harmonic structure. So it's one thing to say, oh, we blew through this dark green line. It's another thing when it blows through and it comes back and retests it and finds that it holds. Okay, that's when it's respecting this harmonic structure. So that's a low risk spot. Okay, I picked some up right there. Okay, not a lot. I picked up 4 of these little micro contracts just because, you know, we're watching the show. During one of the clips, I bought some. And I was down a little bit off that spike. Now I'm, you know, back up, I don't know, $100 or something, you know. So throughout the day, I'll get more active in this and increase the risk, right? If this thing starts to work. Again, 2 Fridays ago, we saw, or not last Friday, but the Friday before, we saw this big spike. Last Friday, we saw the same kind of thing in the morning. So far, we're not on that path. We're on an opposite path of that. What's going to happen this weekend? Is this Friday going to continue with some kind of an event, right? An event. Could today be a big rally up on the upside? I don't know. I mean, that CPI data doesn't really indicate to me that that could be the case. But again, sometimes you get past that data and now the markets are free to run. They're going to look into this Asian conference. Maybe the markets are getting feedback as to what's going on the table. And remember, Scott Bessent sets this whole thing up with China, right? He had conversations, I think, the last 2 days with his Chinese counterparts. They might be getting a good vibe, and then they're telling President Trump, here's you know, these are our green light areas, these are our red light areas, this is our yellow light area. You know, this is where we can go strong, this is where we can go, you know. And so what's going to happen with these, and sometimes that stuff will trickle back, right? He's talking to people, it trickles out to the markets. Somehow they always seem to know. Is there something going on like that where we're going to get some kind of a release on the upside on this Friday, and we're going to see something big? I don't know, but that's when we see this spike through that halfway, that's significant. Just blew right through it. Okay. Let me just throw in the Elliott wave, right? Because we haven't, again, I know this is a lot of stuff, but for those who are really into it, this is the best I've got. So on this Elliott wave, flip this thing upside down. Imagine the other direction. When we go from 0.1 to 0.3, 0.4 shouldn't cross back above 0.1, but flip this upside down and think of it in terms of the S&P. From 0.1 to 0.3, we just gap through that halfway harmonic, okay? If that's the case, then we could, you know, we were looking to see, can we get a second wave down, right? We get this one push down that looks exactly like a down to 1, and then we get the consolidation, and it doesn't break 1. Okay, so we've seen that 2 Fridays in a row. Now what we're seeing is a gap through this halfway harmonic on the upside. That's 0.2 to 0.3, right? You know, and in between 1 and 4, that line in there, we gap through the halfway. Okay. A lot of times these Elliott waves will line up with these harmonic structures. Think about it. You know, if that point in between 2 and 3 is really that midway point. Okay. And that's what we're seeing on this harmonic structure. So if we just gap through there and we came back and retested it, kind of like 0.4, if we're flipping this upside down, what could have been resistance immediately got blown through, and now it's the floor. Can it hold that level? And can this thing rally? Okay, so we could see a big rally today in these stocks or into next week. So hopefully that, I wish I need to create this Elliott wave on the inverse side so we don't have to do that mind math in our head. I may have that. Let me just see if I have it real quick. Let me just take a peek. I don't think I have it. I thought I built it, but yeah, I don't have it. So I need to build that at some point. Okay. All right. That's that. Let's take a look at this. Wow. I didn't think we were going to go an hour and a half today. I didn't think we had enough content. Okay, let me go to this. Okay, let's go here and take a look at, so that's the S&P. We can just use that. Let's take a quick look at this one too. Okay, so it also came back. Let me just blow this up. So the Dow also came back and retested. So you can see it spiked through almost back up to the 5/8, not quite there. And then it came back and retested this halfway. So again, it's a line in the sand. 47,118 in this Dow on the December futures contract, or whatever you're using. You know, you can mark this point in time because it should basically be correlated, mimic. This is a spot you can use to manage the risk, okay? So you're like, you know, all we're trying to do is minimize the risk, right? Lower the risk and give ourselves a chance. If we get in here and it starts to work, this thing starts to rip, you just keep buying and selling, buying and selling, buying and selling, right? As it buy on weakness, sell on strength, buy on weakness, sell on strength. And if you happen to get out on strength and it keeps going higher, then you just have to reestablish what weakness is, right? You can't have an ego and say, well, I'm not going to get in unless I get a cheaper price than where I got out. Sometimes you just have to say, okay, it went up more, I got to buy on weakness, right? Whatever weakness is. Okay, so again, you don't always get these reference points, okay, like this. These are nice when we get these points and these lines in the sand where you can manage the risk against. This is a place to maybe buy two, and if it starts to rally, you sell one. Look for weakness, buy one, buy another one, sell it. Buy another one, sell it. You do that a couple times, maybe you buy two and sell one. You start to build a position on the long side, okay? And try to keep the risk down, right? That's the key. All right, so let's go look at this. I wanted to look at a couple other charts. We got to look at this gold just because I think it's working fine. It got retested, but it's let me go to, I forget how I got to that. Oh, here we go. That's it. More. Here we go. Okay, here's the gold. Remember, this is our converging triangle. Now, we see it hit twice down in here. Let me just switch over to these rectangles so we differentiate it. So we saw it come down in here. Okay, this is the other day, that spike down. There's another chart here that kind of showed us how we got there. Is it this one? I don't know what happened to that chart. Somewhere we had a chart that showed, that was a good spot to come down and test. Anyway, I don't know where that chart went. Anyway, it helped us establish this low, okay? We had a good chart there that showed that it was coming in, okay? And once that 4,400 was the 4,200 going to hold. Once the 4,200 gave way, you had a feeling this thing was going lower. So you have to figure out where. Anyway, we had this target of this, down around this 4,050, something like that was a target. I don't know what happened to that chart, so I don't have that one. But this is where we picked it up, okay, is in this area. I drew some of these vertical purple lines, right, to show kind of areas of support and areas of potential resistance, right? That helped us define this triangle. Okay, you can see I extended this triangle. These, the green line and the purple moving averages are coming together. I extended these lines out into next week. All right, this decision point. The CPI data today, Fed meetings next week, Asian trip. China tariffs. The China tariff extension. Big tech earnings next week. We can't forget that. A lot of things coming into next week. Okay, so we get that bottom. Okay, where that purple things at. Then we get another one here, another retest of that. Okay. And then we get a nice rally out of this the last day or two. It didn't quite get up to here. I had I was hoping we would see it go up to the upper end of this triangle. It didn't. Okay. And then it came back down and it retested this overnight down in here. Okay. The bottom of this triangle. Now, are we going to see maybe a move up to, maybe it was a little too aggressive to see it come all the way up to this triangle. And maybe our number's not right. Maybe the line's not effective. You can see this moving average is actually coming down, and it's not this one that I drew is the reason I left it there is because it projects out into next week where I think the indecision points to, okay, where that pink box is at. So I left this moving average, even though we can see the purple moving average is below that, right? It's underperforming what we potentially thought. Now, can we see a move up into here though? Okay, and actually validate this triangle based off of time. Okay, so some of this is off of price, some of this is off of moving averages, but some of this is just based off of time. We're looking out into next week, indecision in next week. If we're going to have indecision in the next week, then we can use this triangle to say, okay, where does that project to? How do we get there? Can we see a spike today in this gold or today or into the weekend up to this, 4,200? So remember, we talked about this. When the 4,400 level seemed to be intact, we said maybe 4,200 is the lower end of that range. Well, we blew through that 4,200, but maybe it's still important on the upside. Maybe this market can go back up and hit that 4,200, another decent psychological level. Maybe not for the general public, but for traders, that's a psychological level. If this thing can get up to 4,200 today, that gets us up to that trend, to that triangle right in this area. Let me just put that in another color here. Let me just draw this. That would be this area right in there. Let me just turn that to like green or something. Okay, so that green box would be that 4,200 area, and it would complete this time triangle that we're talking about. and it's a good spot to potentially take another short for a sell-off, right? So again, we're trying to trade this range, and so far it's worked out pretty well. We're able to buy off the bottom end of this trend channel or this triangle, and this was a nice rally. I mean, this is a massive rally right here. In most situations, this is a great move, but this gold market's just been on fire. So anyway, so hopefully that kind of completes the story on this gold. We're just watching to see if this triangle can complete. Be a buyer up into that green box. At that point, think about flipping around and potentially being a seller, for a move back down into this area. Okay, something like that. And then maybe a tight move up into there. Whether this triangle is perfect or not doesn't really matter. It's the concept, right? This kind of holding a base, trying to push higher, not able to hold it, come back down to a base, pushing higher, not able to hold it. Once we get past the apex of this triangle, and once we figure out, a little bit more technically what's going on here, we can carry that into next week and say, okay, what's next? A move higher, a move lower, a move sideways in gold. Is gold gonna go sideways for a while? What do we have on our hands? Okay, right now we're still in a wait and see. And then let's look at silver real quickly. No big surprise here. You can see we had these I think we put these on. I don't remember we put these on, but it's back inside this range. Okay, these purple channels. No surprise that it's holding up in there. It's kind of digesting this move. We can do something similar. Remember, gold went to way new highs. Silver didn't. Silver went to old highs, slightly penetrated them. So we got a different technical situation on our hands from gold to silver, right? Gold blew out the highs by a long shot. Silver didn't. Over the last couple months, silver outperformed gold, but overall, gold has been ripping and blowing out new highs. Silver hasn't. Silver just went to all-time highs, okay, around that $50 level. And it went above. I think it hit 53. But generally speaking, it's in that $50 range. And that's where it sits now. It's at like 48.50, okay? And if this holds, then, well, we want to see an energy build come in here, okay? We want to see this thing take a breath, go sideways, build some energy. We know it's got energy behind it. The question is, what happens now with the energy build? Let's give it time. That's my point. Let's give this some time. If you want to be a buyer, try to buy it against that lower channel where you can see that, they've got the two purple shaded zones. Maybe try to buy it in that lower area, which is like $47, $47.50, 48. At least, again, if we... this is where the ego goes out of it. You want to buy it at $22, but you can't anymore. Okay, it's higher. So what is value? Well, value, again, try to buy it as cheap as you can and hope, right? Manage the risk. If you're wrong, you're out tight. No big deal. It's a small loss. If you're right, take a little bit off and start trying to build a position in there, right? This is why I trade actively. Hopefully that makes sense. Okay, let's look at this. Let's look at this soybean. Okay, so soybeans down to the halfway, the dark green line went sideways. Would have loved to have seen it, would have loved to have seen it get down here to this green line. Low risk spot, right? Full downside harmonic hit. That would be great. Going in, I would love to have picked that up down in here this week, going into next week's trade negotiations with China, okay? President Trump meeting President Xi next week. It would have been great to have picked up soybeans in this 976 area with the idea that the energy's out of it, your risk is low. You can put some things on to protect yourself down there as well. And the idea that Trump's going to get something out of China on the soybeans, okay? He's going to get something because politically it's very good for him. And I do think he cares about the farmer. I really do. And so this is on his mind, right? Is to get something for the farmer here. Is it small? Is it big? Is it little? We saw this in Trump 1.0. There was no follow through. I think he had $30 to $50 billion deal for the farmers. And I don't think hardly any of it really got played out because it never got enforced. So that being said, here's the whole situation with the soybeans. We're back up against the breakout zone. It would have been nice to have picked it up on that green line. We didn't get it. What's going to happen now? It could gap through this pink shaded zone coming into next week. The nice thing is if the meeting's not going to happen until next week during the weekdays. So, and soybeans is closed for like 3 hours. I think it closes at like 3 in the afternoon, East Coast time. I forget the exact time, but it closes in the early mid-afternoon and then it opens up again late at night at like 7. So there's a gap of like 4 hours. I wouldn't be surprised if you forward the clock 12 hours. That's like early morning in China. So I wouldn't be surprised that at least we get a chance that soybeans will maybe be open when an announcement gets made on soybeans and we can actually participate in it instead of the market being closed and now we get this gap up, right? That's some of the things you're dealing with. Anyway, that's a lot of details on the trading of stuff. And it's not always about just getting it right or positioning. It's a lot of this junk of like, this market's closed, that market's at this time, right? You're trying to, it's very tough. Sometimes it's tough to find the spot. Now, for those of you who want to get an ETF in soybeans, you know, is this a good chance? It's still a pretty good level down in here, right? We're below the breakout zone. It's pretty depressed. If you think there's going to be a deal, you can pick up an ETF and just ride through the storm. If it's wrong, it's not going to be that big of a hit. I mean, how much more depressed can this get? China's bought no soybeans out of the U.S., right, in the last year, even though China's at record soybean purchases around the world. So how much worse can it get for soybeans, right? Farmers are harvesting. They're tucking it away in the silos. Maybe there's a little anticipation there's going to be a deal, so it could go down some. But I think the downside is more limited than the upside is with a deal. Does that make sense? So we have a skewed bias here. Downside should be more limited than the upside is available to us. Okay, so not to say it can't go sideways or down for a while, but the risk is lower. You can manage. It's not as the bias is in our favor. All right, if we're a buyer in soybeans, I wouldn't want to be short. Put it this way, flip it around. I wouldn't want to be shorting soybeans here, even if you can get a trade. I just think it's too dangerous with this meeting coming next week with soybeans in the line of fire. I wouldn't. I would rather have bought it at the bright green line and take my chances than selling it at the breakout zone. Now, it might spike back down through that green line, you know, off this level. If you're going to sell it, this is a low risk spot, right? I mean, you're up against the breakout zone. So if you're going to sell it, to me, it's not preferential, right? I would rather skip that idea. Okay. I mean, unless I were really just like watching it like a hawk, then maybe. But if I'm not watching it like a hawk, I don't want to be shorting that thing right there. Okay. So I think that wraps it up. I think we covered everything. I'm sort of surprised that it went as long as it did. But with that, have a blessed weekend, everyone. And we'll come back next week. We got currency. Big week next week. A lot of stuff hitting, right? This is going to be a big week next week. We want to get our heads on straight. And I got some stuff to run and do some updates this weekend. And some encouraging things, you know, like this AI. There's a lot of good stuff that we can do to bring to the room and bring in here. And I'm getting some help on that. And so I'm very grateful for that from some people in the chat, you know, that's great. And so let's see if we can't, you know, get some of that and help improve like the output for you guys, right? So there's more ideas available. I've got a lot of ideas. It's just hard to get it all done, especially since I'm putting in like, I think we put 3-4 hours into the tech roundtable, 5 or 6 hours last night. I watched Aaron on Monday night. I mean, there's a good 10 to 12 hours right there, let alone the preparation time for the tech roundtable and then the show every day and then the prep for the show. It's a lot of time going into this stuff, and Aaron's doing the same thing, and I know Courtney and Patrick are doing the same thing. So it's robbing a lot of time from development on other stuff, you know, and then I trade, you know, 10 to 12 hours a day on top of it all. So it's just a lot. And then I do have kids that I try to spend some time with that I love very much. And, you know, I don't want to neglect them either. So anyway, but we're getting there. Hopefully we'll get some of this stuff built and we'll pick it up next week and try to keep our heads on straight and come up with hopefully some good ideas here. All right. Have a blessed weekend, everyone. We'll see you on Monday. Thank you.